Finally, part two. Should I buy Boeing stock right now? Hi, my name is Dee, and welcome to the Money Growth Academy. This is where we demystify the stock market, simplify investing, and multiply your opportunities for financial success. And today is the conclusion of our two-part series, Should I Buy Boeing Stock? And so we're going to conclude that today and give you our final analysis on that. And if you haven't watched part one, go back and watch part one. We'll have it down in the notes. We'll maybe have it up here as well. So make sure you go back to that right now and watch part one if you haven't watched part one yet. All right, so I'm assuming you watched part one, you're ready to watch part two. This is the final piece of this analysis. What I want to talk about here is what I like about Boeing, and then I'm also going to share what I don't like about Boeing, and I'm going to kind of end with that and kind of summarize that and give you my final decision. And so in the fourth quarter of 2018, they had record revenue of about $28.3 billion. That's up from $17.3 billion from prior quarter. And that was really the result of some additional orders, much higher orders in that fourth quarter. Other thing I found out is Boeing is sitting on a lot of backlog orders. They typically do, but they've got a larger share of those backlogs. And a lot of that has to do with that 737. The commercial airlines division, they booked 262 net orders just in Q4 of last year. Those orders were valued at about $16 billion, and it is right now sitting on a backlog of 5,900 airplane orders valued at $412 billion. Also, 15.6% increase in operating margin they experienced in Q4, mostly due to its higher volume of 737s and 787s that were sold. They sold their 787th Dreamliner that fourth quarter, and that makes for just a kind of a very interesting time for them. First 737 Max was sold. That's the one that they're having problems with right now, the 737 Max 8. They sold 111 of those just in the fourth quarter last year, and there's a backlog of those coming through the system as well. And they had a record operating profit of $4.2 billion, driven by much higher volume as a result of the 787s and the 737s. They had a record GAAP EPS of $5.93 and a record core EPS non-GAAP related of $5.48, mostly based on strong performance. Here's some things I liked about their full year performance here. Want to just run through those very quickly. Full year performance at $101.1 billion record revenues. They had a record GAAP EPS of $17.85 and a record core earnings per share non-GAAP of $16.01. Again, records again. They had a record operating cash flow of $15.3 billion. They repurchased 26.1 billion shares of their own stock, and I'll talk about that in a little bit. They spent about $9 billion buying back 26 million shares. Their total backlog, it still remains fairly robust at about $490 billion, including, again, that 5,900 commercial airplanes that are still in that backlog. Cash and marketable securities, about $8.6 billion, which shows or at least demonstrates some pretty strong liquidity for the company. And here's some other things I want to just share with you as well. So what I'd like to do is also to complete my analysis, I'd like to look at the 10-year performance. How has the stock performed? How has the company performed in the previous 10 years? Not a basis for what might happen in the last 10, but if the management is nearly the same and everything seems to be about the same, it gives me some indication. So let's look at a few other factors I consider before I buy a stock. To me, if a stock hasn't had the ability to beat the S&P 500 in the last 10 years and it struggles to do that, why am I going to invest in that? Because I can just put my money in the S&P 500, lower risk. So if I'm going to pick a stock, I've got to feel pretty confident that it has the ability to exceed the performance of at least the S&P 500. So let's take a look at this graph. Now, what I do here is I have the S&P 500. I also have Boeing in there, and I also have Apple, and I'm comparing their 10-year performance. If you own Apple over that same period, you made a great decision because Apple outperformed Boeing and the S&P over that last 10 years. That's starting from 2009. Apple had about 1,139% overall return versus Boeing's 965%. The S&P, not lousy, right? 255%, but you can see Apple and Boeing both beat the S&P 500. So Boeing did a great job over the last 10 years. Things stayed fairly, much the same. You might be able to expect that, but you don't know for sure. There's a lot of factors and variables there. Here's some things I don't like about Boeing. The two previous accidents that caused so many deaths, that's some cause for concern, obviously. Could this have been prevented? And we're still trying to find that out through the investigation that they're doing now. And as that investigation wraps up, we'll find out if it was preventable. And so one of the concerns is they pushed things through too fast. Did they shortcut some systems? Did they not provide some training that they could have? And if some of those things happen to be true, that's going to bring on some greater litigation for sure. The other thing I don't like is that they repurchased that 26 million shares that I told you about for about $9 billion. That always concerns me because, number one, the stock was at its highest price, and why would a company be buying back its stock when it's that high? And my thought is always, is that the best investment that management could have done with that $9 billion? I'm not sure. I'm not confident. And what it does is when they buy back shares, it reduces the amount of shares outstanding. Therefore, the remaining shares have increased in value, but that also pumps up the price per share. So as a shareholder, yeah, my value went up, but the real value of the stock may not have changed as much. At least camouflages some things there. And I would much rather see them reserve that money and buy that stock back when the price is a little bit better, and they can buy that stock back, and it does all of us a greater value when they're buying that stock back at a much lower price rather than at a premium price. So I don't think that was a good decision, in my opinion. Some concerns about production for the company. Come to understand that they've doubled their production of aircraft, which is concerning. I hope things were worked out well. When there's an uptick in total production like that, are employees being pushed too hard? Are quality control issues at stake there? As a result, are there bad incentives in place because incentives drive behavior? And hopefully this latest accident wasn't the result of some incentives that were in place, because we will certainly see some legal and litigation in that area. So if the stock price is inflated a bit because the company bought back so many shares, as I mentioned, that's a concern. It's hard for me to also determine the intrinsic value of the stock, because I'm trying to get as close as I can to the actual value of the company on a per share basis. And even though the stock is down 11.65%, I know there's some float in there because of them buying back those shares. And so trying to calculate that in could bring some concerns. And the other thing is, are there going to be more buybacks in the future? I don't know. And hopefully they don't buy those back at those higher numbers. And so maybe there's some per share price pumping going on. And another thing I don't like is their dividend payout. For such a big company with so much revenue, they don't pay out a lot of dividends. And PPC Ian does a great job talking about his analysis on the dividend portion of Boeing. If you haven't seen it, look him up on YouTube. It's a great video. I thought he did a really good job with that video. So just in summary, as we're looking at that graph talking about the 10-year performance, I want to remind you again, past performance is no indicator of future performance. So one of the things you have to ask yourself is, what are the chances that Boeing does that the next 10 years, right? What are the chances that they beat the S&P 500? So you have to ask yourself those questions, present yourself with an opportunity to prove to yourself in the information that's available whether or not they can actually do that. And the other factor is, can you make a large enough investment today that can optimize your growth potential? So if you buy some shares today, can you buy enough of those shares? Can you be concentrated in enough of those shares that would make a big enough impact on your overall portfolio 10 years from now? So there are multiple variables to consider. When we're looking at Boeing today and we're looking at the stock price, we're trying to anticipate what's going to happen in the next 5-10 years. Questions I have is Boeing able to remedy this situation in the next 10 days? What will be the financial impact in the event of lawsuits that might take place? How much money will Boeing have to pay out in order to make up for airlines that were grounded during this period? And will Congress split up the cozy relationship between the FAA and Boeing? And how will that impact future approvals? And is the new FAA, will there be more FAA regulation in place as a result of this? For me, it's a no buy. And let me tell you why. The stock price, because of it, even though it's discounted down under 11.5% because of all the things that have happened. The stock price still has a little bit of fluff in it. So to me, it's still riding premium price like most of the market is today. And so to me, at 370, 375 a share, it's still pretty premium for me. Maybe it works for someone with who's going to plug some big money, 50,000, 100,000 in there, and they can sit and they can wait it through as it appreciates, hopefully, and maybe that's the possibility. But I'm telling you, if you're going to put less, to me anyway, this is me, right? Because again, this is for education purposes only. I am not advising you what to do. I'm just sharing with you my interpretation of what I have and how I analyze it. And again, this is for education and entertainment purposes only. You should see your own financial advisor to help you with that decision. But for me, it's a little rich for me. So I don't know that I'd get the bang for the buck that I'm willing to invest. So I like to concentrate my dollars deeper over fewer stocks rather than what I would call the strawberry jam theory, where you spread it too thin over too many loaves of bread and it's virtually tasteless. Well, the same thing can happen when you do that with stocks, right? You have 18 stocks, you got 15 stocks, you got all these stocks, and you got this money dripped over each one of these, right? And it's not in high enough concentrated amounts that when the stock appreciates, you get that run up. And so for me, I like to go deeper in a stock, fewer stocks, so I can get that run up and appreciation as it performs. And so right now, I'm telling you, I'm just being really picky right now when it comes to buying stock. We're at a point in the debt cycle, maybe late in this debt cycle. It's really high. I mean, just on consumer debt alone, it's the highest it's ever been. $4 trillion, $17 billion. That's a lot of consumer debt. $1 trillion, $56 billion of that is just student loans. So that just gives you an idea of, we're at the top of this debt cycle. And like in 2008, when you get up to the top, somebody has to reset the clock because all that money has to come back in. And what people start to do is they start to save. The economy starts to slow down a little bit. I'm not saying that this is going to happen for sure, but it sure makes me relatively cautious because there's a cycle that debt runs on, and it just seems to be fairly predictable. And so I want to be very cautious about that. And because of that, I want to make stock picks that really make sense to me long term. So I really think we're in uncharted territory right now. So you'll have to make your own decision. And I'm going to tell you, with over 2,500 stocks to choose from, I think for me, I've got to let this one go. As this one comes over the plate, I'm not going to take a swing at it, but that's me. One of my favorite images I have in my office is of Ted Williams, and it's a picture, and it's from his book. It's from that book, Science of Hitting. It's a picture of him standing there with a bat and with the strike zone there, and with his sweet spot there. And what I try to do is get those stocks that fit that strike zone, right? That's my sweet spot that I like to swing in. So other than that, I can stand over the plate, and you can stand over the plate. As Warren Buffett says, there's no called strikes. So that means we can sit over the plate and we can wait till a good pitch comes over. And then when we swing, we can take a full swing at it. And taking that full swing is going deep in that stock because you've done your homework. It's come to a discount. Now you're ready to buy, and you buy big. At least that's how I like to buy. So let us know if you like this analysis. It's been beneficial to you. If you learned some things, give us a thumbs up if you like what we talked about. Certainly hit our notify so that when we have a new video come out, you make sure that you get access to that. Be sure to watch our video, how to invest your first $1,000 to make sure you get your investment program off to a good start. And I talk about some very good principles there, so make sure you take a look at that. Make sure you hit that subscribe. We'd love to have you part of the community. Thanks, and we'll see you next time.